Hello, and welcome to Pro Trader Strategies Market Commentary for Friday, December the 18th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I cannot give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you're already doing. Having that out of the way, let's get this on. Not a whole lot of really important economic data coming out today. We did have some Canadian CPI numbers came in lower than expected, and flash PMI here in the States was lower than expected, but that's not widely looked at. The overall market is kind of down right now, and not very much, but it's got traders a little edgy because today is triple witching, so which is when the options expiration cycle happen with some of the futures and things of that nature are going to be a little bit more volatile. This is one of the largest expirations we've seen in several years. So going into the end of the year, it's got a lot of traders a little edgy. So you could see some bouncing around, some volatility in those markets. As you can see here, E-mini NASDAQ chart, we're down 10 points or so right at the value area high. So that's going to be acting as support. As you can tell here, this is the E-mini S&P chart, and on a 15-minute chart. The thing to note here is the value area of the time that's been spent has moved down to where we are right now. This is where the most time has been spent over the past several days. So that is interesting to note. It's starting to look like the bears are grabbing hold here. So that you'll have to keep an eye on. The overall equity markets are down, as you can see here. The E-mini S&P is down about 10 points. Onto some trades that I did. Most of these trades I did late in the day yesterday before the big market sell-off, luckily. But my deltas were getting really long in my portfolio, and being close to the highs, I needed to add some short deltas to my overall portfolio. So I really just went through the list and found some stocks that were up on the day and started shorting them with some calls. So most of these trades, like I said, I put on yesterday late in the afternoon for the most part, and they are kind of just to neutralize or get short deltas in my portfolio. And I did Yum Brands here, and I did the January 75, 77 and a half call spread and sold that for 75 cents. So that one's looking pretty good so far today. We've come off a little bit as the overall market sold off. And the reason why I did that, like I said, it's been in a downward spiral. I'm going to have to keep an eye on this because this low here I want to get pierced just to make sure that the bears are still in control here. But this lower low, and then we've came to a higher high here, kind of covered that gap there. But I'm hoping that it'll come off a little bit there. And in Netflix, I also did some short deltas in here, and I did the January 142.86 calls. Now, the reason why those calls are kind of funny is because if you remember, Netflix had a split, so the calls are in decimal points. So that's why I have that 0.86 in there. So that's a little strange, but that's because of the split in Netflix. And I sold those calls for $1.42, and looking to just take 50% of that profit. As a matter of fact, I'm gonna, if it gets much lower, I think it's trading around $1.10 or something like that. If it gets down to about 90, 80 cents, somewhere in there, if I get a bit of a sell-off here and break below this low, I might look just to cover those rather quickly. In XOM, as you guys know, I'm long a little bit of oil, so I did this as a hedge against that oil. Oil continues to slump, and yesterday, ExxonMobil was showing a little bit of strength there, but they're just not going to do very well if oil prices go down much lower. And refiners right now are looking at, with this crack spread, which is where they break the crude oil down, they're going to be almost looking at negative margins on refining here pretty soon. So that's something to look at. And if they start having that issue, that's going to really pinch their margins. So I looked at the XOM and sold the January 82.5 calls for 63 cents. And, I'm looking at it to at least come down and test this 74 area. I'll probably cover that well before it gets down there, though. Anyway, and in Solar City, as you can see, we had a pretty big spike, and it's just jumped because of some funding that the government's going to be throwing to these guys. And it just looked like it was a little bit overdone. I was looking at it like there's going to be some longs that start to cover. Plus, you had this shooting star, if you will. Usually a shooting star is at the very top of a market where it really pops higher and the shorts kind of puke out. But it looked like a shooting star nonetheless. And then on the open, actually, it was down quite a bit more. And I just, right before the open, put in an order to buy it and felt like I got picked off kind of. But I had on the January, sold the 70 calls yesterday for $1.20, and then this morning, right before the open, I put in an order to buy them back at 70 cents and got hit almost immediately out of the gate. So the market has come back a little bit, but I haven't checked those calls to see what the price is right now, but that was just like a quick flip. It wasn't quite 50% of my max profit, but as I've talked about in these webinars, if I can get even 20 or 30% of my max profit in a couple of days, I'm going to do it. And this was almost at 50% of max profit there. The only reason why I have Disney up, I don't have any positions on in Disney, but I figured a lot of people out there have positions on in Disney, so I wanted to talk about it. BTIG downgraded Disney because if they don't get $2 billion in global sales off of the new Star Wars movie, then they aren't going to meet the price targets that BTIG originally had predicted for them. They also did a big deal with some deal with the sporting, and I'm not really sure what that is. I probably should have looked into that a little bit more, but they just made a big contract with the National Football League and a couple others, and people are saying that that's probably not going to pay out for them. So that's another reason why Disney has been down. That's about all I got for you today. We're having a webinar today on doing the collar, and the collar is buying a put, selling the calls. And we did a webinar on this similar strategy last week where we just bought the puts to hedge a portfolio because the NYSE is getting rid of stops. So this is a way to synthetically create a stop. Now what we're doing is we're going to add that call on there for two reasons. One, it will help pay for that put that we're purchasing, so we're not really increasing our basis. And when we increase our basis, that means we increase the purchase price of what we paid for the stock. So an example is for Disney, if we paid $100 for Disney and paid $1.50 for that put, then our real basis is $101.50 for Disney. Now what we're going to try to do here is sell a call and finance that put. So we're going to try and sell a call for say $1.50 or 90 cents or something. So it doesn't really increase our basis that much, but we have protection to the downside. So if the market really tanks, for instance, comes down here to the 90s, that would behoove us because we would be getting our out price well up here in the hundreds. And if we were to see a real pop where it just kind of jumped maybe on a rumor or something along those natures, then we can get out with our limit order, and that would be selling the calls. So that is a nice little aspect to that strategy, is that you can put in a limit order and a stop at the same time, and not really increase your basis on your stock. So check that out. Seems a little bit confusing maybe right now because it's only in a couple of minutes, but I'll go over this in detail for well over an hour. And by the end of that hour, it seems that everybody really gets a good grasp on this type of strategy. That's all I got for you today. Like I said, if you can't take that, take it easy.